Okay, awesome. Welcome back to Smart Analyst Global. Good to have you guys on board. Good to have you back on board. We today is day three, and we're going to be talking about smart money. We're going to be talking about what the institutional investor, what the institutional trader do, and how to position yourself profitably. I mean, doing what they do, because if you are going against the market, right, you obviously are positioned to lose. Where's this thing? Okay, got it. You obviously are positioned to lose, right? So we're going to be talking about how to use the tool, how to use, how to analyze the market, how to understand the market, and also profitably use the market, use the tool available in the market for your learning. So, come on, that's not it. What's going on? Apologies for starting a bit late. I had to just go refresh my head a bit. And well, good. So I said in the first class, I spoke about the timing. I spoke about timing. I spoke about uh, how to enter the market. I spoke about the advantage and disadvantage of investing and trading. I spoke about time frame. I spoke about and yesterday we talked about the assets to trade. We talked about the if you should trade or if you are deciding to be a trader or being an investor. We also spoke about the advantages and disadvantages of being a long-term trader or long-term investor. We also spoke about the which I gave you the scenario of investing in the advantage of investing in Nigeria money market fund over US money market fund right now based on the rate of returns in those markets, right? Those are the things we talked about. So today we're going to be talking about smart money concepts, chart analysis, and how you can actually use STIC with STIC to plot your entry without plotting using STIC entry plots to be able to analyze the market and get your right entry. Those are things we're going to be talking about today. Awesome. Good to have you guys on board. Please let me know if you can hear me, if the sound is very, very audible, because I got some feedback few yesterday that the sound is not very, very clear. So please let me know if the sound is very clear right now, and we'll know how to go about that. Please let me know. Just if you can hear me clearly, type one in the comment section, either on YouTube or on our Telegram community, Smart Analytics Global Telegram community. Please, if you can hear me, type one. If you can hear me, type one. So, if you can hear me, please type one. And it would be good to know where you guys are chatting from, where you're joining us from, the country you're joining us from, Nigeria, UK, US. I know we have our community members actually global, right? We have community members in India, China, UK, US, Canada, Nigeria, and several part of Ghana, and several part of the world, right? So if you're joining us, please type the country you're joining us from. Let's know where we are from. Awesome. And if you can hear me clearly, please type one. Just type one so that I can know you can hear me clearly. Type one if your my sound is very audible and clear. Please type one. I'd like to get our feedback quickly before we move ahead. So, like I said, today we're going to be talking about smart money concept, what the smart money do, and how to act and position yourself like the smart money will do. How to ensure that you're not missing out of the market, right? Those are things we're going to be talking about today. Okay, so please let me know if you can hear me. Type one, please. And please refer, invite your friend, invite your lovers, invite your frenemies and enemies. Like, let everybody benefit from you, right? Let somebody learn from you. Let somebody benefit from this. Please like and subscribe. Do like and subscribe as well. If you're just joining on and you're not yet subscribed, please like and enable the notification button so that you can be able to get notification whenever we go live or whenever we post any of our content. Please do like and subscribe. Subscribe as well and do enable the notification bell. Okay, so I believe you can hear me, please. If you cannot hear me, let me know. I need to get that feedback before I continue. From my own monitor, I can see that my sound is very, very clear. So I'm thinking everything is fine. So if everything is fine on your side as well, please just type one. Let me know that everything is fine. Okay. Um, can everybody hear me, please? Let me know if you can hear me. Type one if everything is fine. It's very, very important. I know that the sound is very, very clear. That's very, very important. Let me know, let me know, let me know, let me know. And don't forget, please invite your friend, post in your WhatsApp community, post in your WhatsApp. If you're a trader and you probably have been making gains and losses and probably in between, I'm basically here to share my experience, both my wins, my losses, the mistake I've made, and for you to be able to learn from them. So that is the purpose. Please type one if you can hear me clearly. Type one, type one, type one. And also, let's know the country you're joining us from. Okay, if you're a trader and you're not, you've been probably you've been making some gains but not consistent, right? And you've been making some errors and mistakes, or you don't really understand the market, you don't understand the chart. This is what we're going to be talking about today. So like I said, one of the tools you can use is STIC, and STIC gives you, it helps you remove emotions like we talked about yesterday. It helps you remove emotions from the market. It gives you it show you clear confluence in the market and give you basic direction bias to tell you auto detect liquidity zones, sweeps, and reversal breakout. It also give you entry, your stop loss, and your take profit prices. Basically, help you checkmate your emotions. That's what STIC does for you. So, and that is that basic. And the next thing I'm going to be going to is into the charts, right? I'm going to go into the charts, and I'm actually backtest replay the chart a bit so that we can actually explore the market. So, if you play, let's say we're playing what's been happening in the market. Let me do it on 5x, right? And playing what has been happening in the market. Skip STIC gave a buy entry and is going right. Give a buy entry and the market is going bullish. And this is actually the current, more like I'm still updating. We're going to be pushing some updates very soon. So I'm writing some script to fix some of the. I saw some inducement trap in the entry plot. So I'm currently working on fixing that. So once that is done, I'm going to push the update. So this is the gives you entry and you follow through. It gives you volatility extremes. It gives you the way to protect your profit, alert on where to protect your profit. So you get a clear alert on when to protect your profit, and till the market reverse. Once the market reverse and switch into the bear mode, STIC will give you indication on when to sell. So STIC basically help you catch the top as well, but I will always advise don't use the top signals for your main entry. Don't just ignore the top. It's best for you uh to catch the entry at validation. That is when there's a valid reversal, than for you to say you want to catch the top or you want to catch the bottom. So this is STIC in play, right? And one of the things, right? I, I want to explore today is using STIC without the entry plots. How can you use STIC without the entry plot? And you can do that in this settings. Just disable show entry sentiment with stop loss. Just disable it and you're good to go. So once that is disabled, STIC, let's wait for it to load, right? You're going to It's going to remove the plots, the entry plots. So once the entry plots are removed, you can see entry actually give you the stop loss, the entries, and the TP. So the entry plot has been removed right now. And the market has gone up and it's currently reversing. I'm currently on 15 minutes time frame. And mostly I pick that on 5 minute time frame. But I go to my 5 minute time frame, you see the plot, you see the direction very, very clearly. So, like I said, if you are a trader and you're probably using STIC, one of the things you need to understand is smart money. What do smart money do? Smart money basically look for liquidity. So one of the things you understand is that liquidity is very, very important. Remember in our first class, I said you just don't pick entry, you just don't pick any asset based on I feel like I want to pick this asset. You pick asset based on the volatility in the asset, the liquidity in the asset, and the sentiment around the asset. That is what make you decide which asset to pick. And one of the things I used to do before now is probably over trading. I can be trading. There are times I trade 50. 50 trade at the same time, 30 trade at the same time. That is very, very bad. Uh, for a time it was good, but if the market switched and the market flipped, it could be very, very difficult for you to get the direction or close all your take your profit at the right time. So that is why it is very, very important for you to pick just one asset and trade one asset at a time. Don't overtrade, trade one asset at a time. So one of if you're checking the chart right now, and I'm going to zoom in a bit so you can see what's been happening. Let me delete this. I think we're using this for. So if you're looking at the chart right now, you see some dash. You can see these red lines, and those are liquidity zones. Those are liquidity zone that STIC has already plotted for you. Okay, I'm going to be yeah, and this is the show liquidity, show institutional liquidity region. And like I said, it is all about it's all about getting the right entry. So I'm going to be using the live stick indicator because this is currently in development phase. Okay, so using the live stick indicator, got the short, the market reversed, and I am okay. Let's just continue. So when the market reversed, there is what we call change of character. So what you want to do, like what I'm teaching here is basically the basics, right? What I did is to enable on the current live indicator, we have more liquidity zones. You can see these red lines. Those are the liquidity zones. If you can see my screen, my chart, please let me know. Or if I should switch to light mode, if that will be better. Let me see. Okay, I think light mode is kind of better, right? So I'm switching to light mode. That is okay. So using stick indicator, right? Switching to the light mode, you see this red line clearly, right? And what the red line means that they are what we call the sell side liquidity. These are points where the institutional investor look out for. They always look out for liquidities, which are very, very important. Liquidity important in trading. So if you're actually just hunting for because and what are liquidities? Liquidities are what are liquidity locations? They are actually locations on the chart where majority of the trader will put their stop loss. So liquidity zones are points on the chart where majority of the of trader tends to put stop loss. So where you put your stop loss is where the institutional liquidity, institutional traders want to hunt. So they want to hunt your stop loss, they want to take away your stop loss and liquidate you, right? And because that is where they're going to be able to fill up their trades. So they look out for liquidity zones and they try to sweep the liquidity before going in the major direction. So how do you normally, what's the best way to analyze a chart? Like I said, one of the things STIC has done is to analyze to do multi-level analysis. That is, it has analyzed basically all this liquidity you're seeing right now are points of liquidity on multiple up to like 7 different time frames, analyzing 7 different time frames and plotting it where the liquidity reside for you on your entry time frame. So, like I said, if I am a scalp as a scalp trader, I'm going to be picking my entry between a 15 minutes time frame or 5 minutes time frame, just in between that range, because I want to take my profit within a day. So I'm switching to 15 minutes time frame right now and looking for liquidity zones. Right. So the first thing now, like I said, the markets you came into the market today this is the Asian market. You came into the market. The market has already dumped. Beginning of the market dumped from 11th of June, and currently it is still dumping. Right. So the market dumped, and what? Assuming you are a new trader and you just got into the market, what should you do? So the first thing for you to do is look out for reversal point. And that is what we call the market change of character. The market always change whenever the market change character or whenever there is a break of structure. That is one of the things STIC does for you, right? So STIC will show you. So let's zoom in a bit. So let's zoom in a bit. You will see change of character. You can see this CHOCH. That is change of character. That is a change of character label from STIC. And you will see the orange, the yellow candle represents a bearish mode, which essentially whenever the market breaks structure and move into the bear zone, the candle is going to turn to yellow. And whenever the candle breaks structure and move into the bull zone, the candle is going to turn blue. And that is what you're seeing on the chart right now. So that is what you're seeing on the chart. I'm currently in a replay mode. So the market actually changed structure and switched into the bull mode, and the market is, like I said, this is on this time frame. But for you, what would you do? Most traders are like, oh yeah, this is this. They can see one of the things you get on stick, right, is the liquidity itself. Stick will plot. You can see BLQT. BLQT on stick means that the this is bullish. There's a bullish liquidity, and what forms a bullish liquidity? Whenever there's a break of structure, that is, whenever the market breaks structure and want to continue in a direction, there's people are going to. The implication is that a lot of traders are going to open their trade. So most traders are like, okay, this is a long trade, and they want to open their long here and put their stop loss around this region. So Stick is saying there's liquidity below this region. So these are liquidity regions. So and most traders will just want to hunt their stop loss and say liquidity is there. And what would the institutional liquidity do? Institutional traders do. They come back and hunt this liquidity. Most times just sweep the stop loss that's below here, because most traders want to put their stop loss below here. Once the stop loss below here, like what happened here, then bounce back up, right? So what should you do as a smart trader? This is not, I'm just giving a scenario. This is not like the right thing to do here, because the market is still in the bear trend. So as a smart trader, what do you want to do? You want to analyze what is happening from multiple time frames. So you need to have a minimum of three different time frames: the higher time frame, the medium time frame, and the lower time frame. So for me, my hour time frame can be a daily time frame. So if I go on the daily time frame, what is happening on the daily time frame? So if you go on the daily time frame, one of the things I want to look out for is that is the direction bias on the daily time frame. So if you're going looking on the daily time frame right now, the direction bias on the daily time frame from a long for for few days has been bearish. And right now I'm using the projection to see that. You can see market has been in the bearish zone. Market is dumping. So one of the things I tend to look out for is a potential reversal, because right now what has happened on the daily time frame right now is that the market has broken structure on the higher time frame. And like I said, whenever the market breaks structure on the higher time frame, there's always liquidity. You can see LQT, BLQT here, indicating that the market has switched to, let me bring this up. Order front. So good. So you can see BLQ2 right now. That is indicating that the market has switched into the bull cone and there's a liquidity below. And look at what happened. Most people are like, okay, yeah, the market breaks structure and the market is continuing to uptrend. What do they want to do? They want to put, please enter and pick their stop loss here. And mostly they end up putting stop loss around this low, right? So let's play it forward. So analyze what is happening on the hour time frame. Then I pick a medium time frame. Either there's a 12-hour time frame, 4-hour time frame, 1 hour time frame, depends on you. You can pick your medium time frame and analyze further what is happening on the medium time frame. So going to medium time frame, I'm checking out what is currently happening. You can see the market broke structure, like I said, and on medium time frame, it has changed character to the bullish mode. And the market has already it has broken structure and picked this liquidity on lower time frame. Now, what am I looking for? Like I said, if you look at what happened on daily time frame, it is looking as if it has swept the liquidity. And whenever liquidity gets swept, the market will continue. That is, we have a break of structure, right? The market breaks structure to the bull side. And like I said, this is very important for say long-term trader and short-term trader. And if you understand this, you can easily just look at the chart. Oh, this is what is happening, and you can pick. The market has already swept liquidity here. You can see it swept the bullish liquidity, which is this bull line. There are green lines here before this one. So it swept this there. It has already swept liquidity here, which is below. If you look at it, it is below this low. Is below this lowest low here. So it has already swept the liquidity here. And what am I looking for? I'm looking for the market to change character. So you want to look for a change of character or a break of structure on your what's the hour time frame. So basically, let's play it forward. As I'm doing that, I'm going to be moving to my medium time frame to see what happens on my medium time frame. So checking out medium time frame to see what's happening on my medium time frame. Uh-oh, that's already broken out. Sorry. So that's our I think let me play backward. It has gone faster than I wanted it to. Okay. So this was that confluence. This was when the market swept the liquidity. You can see here. It came down and swept the liquidity. And I'm looking for a potential change of character on my medium time frame. So I play it forward, and on the hour time, the first thing is you look for a break of structure or change of character on your higher time frame, and you want to match that with correlate that with your medium time frame. So if I would just want to scalp, if I want to scalp, one of the things I get to do is when I see realize that the market has already swept liquidity on a lower time frame. This is me using stick without the entry plot, right? It has already swept liquidity on a lower time frame. There's a potential bounce up because it's going to rebound. So most times, if you want to scalp, this is just a very risky trade. I just place my entry. I wait for a break of structure here. After sweeping liquidity, you can see it has swept the weekly time frame liquidity, and I wait for a break of structure here, and I plot my entry. I plot an entry basically around this liquidity. You can see it's saying there's liquidity below here, so I plot my entry below and put my stop loss below the liquidity here. Sometimes, probably most times, a sharp entry, just get it in and get out below the liquidity zones. Target 2 RR mostly, or 1 RR, 1.5 RR. So if you look at what happened, the market broke structure, came back down and picked the liquidity that we're waiting for. Yeah, you can see it pick your entry and bounce back upward. We're looking for 2 RR. So at this region, you're out of the trade and you've already taken profits. But let's say you're not scalping, you don't want to sharpshoot your entries and get out of it. What do you want to look out for? Mostly, I want to look out for a change of character, a break of structure on my higher time, on my let's say the higher time frame, which is say 4 hour time frame. Good. So uh, 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 sorry. Okay, let's just say so. The market basically breaks structure here, and when and this is because it sweep liquidity, the market sweep liquidity and broke a structure, basically change character into the bull zone. This is an indication. So what you want to look out for is this first candle, this one that I caught here. So you look out for this first candle when it breaks structure and you got your entry. So let me just play, but let me drag it back a bit. So like I said, in the last class, in our first class, I said trading is all about patience. There's more about you after doing your analysis, you have to be very, very patient. So like on your 4 hour time frame, the market breaks structure and it indicates that the market is bullish. If we close bullish, what do you see here? Upward liquidity on the medium time frame. Then the next thing you want to do is to go to your say your entry bias time frame, say 15 minutes time frame. Like I said, you can either use 15 minutes or 5 minutes. So using 15 minutes time frame, you're looking at what has already happened, right? Which is there's a change of character. There's a break of structure on your hour time frame, and on your medium time frame, there's a change of character. That is, the market has already changed character into the bull mode. And when the market change character like that, what it indicates is that there's always a liquidity below. You can see all this. You can see this green line. This is at institutional liquidity. You can enable that in STIC, like I mentioned earlier. You can enable that in your STIC alert here. So show institutional liquidity region. So, okay, let me do a zoom in thing. Okay, so show instead. I'm trying to zoom in so it can be clear. I like using a very small, tiny font anyway. So I believe you can see my screen much clearer right now. So we have the break of structure. You can see stick has already indicated that there's liquidity around this region. You can see this is the liquidity. It's telling me there's liquidity here. So what do I want to do? I want to place my entry. Mostly, I want to plot my entry around this liquidity. So I mostly just plot my entry around this liquidity. And because I'm using a higher time frame complex, it's plot my entry around this liquidity and waiting for a 2 RR. So plotting my entry. Like I said, the market has already broken structure. So you're waiting for the market to come back to pick this liquidity because it will always come back to pick the liquidity. And plot my stop loss is going to be below the low. Yeah. and I'm targeting say 1.5 RR or 2 RR. So let's wait for what happens and play it forward. Let's see how the market goes. So exactly, which is cool. So the market is still playing forward on a. This is me picking my entry on our time frame. So the market actually hasn't come back to pick this liquidity, which is interesting. It happens, so you have to wait for it. And most times, the reason why that is because there's liquidity above. You can see that what is currently playing out. There's liquidity above. So most times you have to wait patiently for the market to come back to pick your liquidity, or you. Or most times, if you're using the entry plot from STIC, I think you would have gotten the entry. Yeah, entry plot. Let me see. Enabling entry plot. So the market will basically come back to sweep this liquidity, and this is you me trading on. I mean, doing my analysis for on 4 hour 1 hour time frame. No, not this, not this. That's the wrong plot. This is the correct one. Still loading. Okay. So yeah, like I said, you can see what app stick already plotted the entry here. While it is coming now, it's coming back to sweep the liquidity. It's coming back to sweep that liquidity. The first one is basically going to sweep the liquidity for bouncing back. And most especially wait for the next one. So you can see if you actually analyze your trade after sweeping the liquidity on lower time frame, on your say your direction bias time frame, which are mostly use 5 minutes or 15 minutes time frame, you can see stick already plotted the entry is indicating that the market is flipping bullish. So flip bullish, you follow the trend. That is if you're using the entry plot. Or if you decide to just not use the entry plot, you could also get your you could also get your direction bias just by come on. You could also get your direction bias just by using uh by analyzing your entry from your from the medium time frame. So like I said, market is coming back to pick that liquidity because like I said, we analyze on our time frame. So what you want to do on your annual time frame is get your direction bias. Once you get your direction bias on your higher time frame, is the market bullish or the market bearish? If the market has already swept liquidity, that's an indication that once the market sweep liquidity on either your higher time frame, say daily time frame or weekly time frame, the market will most likely bounce back up. So what you want to do is to take advantage of that bounce. So after sweeping liquidity, you place your entry, first do your quick swap if you want to probably do more than one trade in a day. Second trade is the market sweep liquidity bounced off, then change character on the medium time frame. So when you change character on the medium time frame, so this is the market did change character on the medium time frame. I go on my lower time frame and I pick my entry. I pick my entry that is say this is the medium time frame break of structure. Come back on 5 minute time frame and I look for my entry. So you can say this was the break of structure. So let me just pause that what is currently going on. The market break structure came back basically whenever you change character or change whenever the market change character on your medium time frame, you want to look for entry on a lower time frame. Okay, so after changing character on the medium time frame, then you look out for the liquidity zones, which is mostly around here to pick your entry. So at what point did it change? Did it break structure? One of the things you also see zoom out on stick is the break of structure line. So for me, one of the things I noticed, right, is that most times the market will change character and break structure, but it will not come back to, it most likely will not come back to peak liquidity immediately. And it will just break out and continue uptrend. One of the things you want to do, right, is like on my medium time frame right now, the market has changed character. You can see liquidity, there are liquidity here. This is liquidity, this is liquidity, this is liquidity, this is liquidity. You can see there are multiple liquidities around this region. And if you zoomed in, you will see the break of structure line. So most times what I want to do is to place my entry around those lines. Just look for the break of structure line. That is the point at which the market breaks structure. And that is where I'm going to look at for my liquidity, my entry. Alternatively, one of the things you can do is to use your Fibonacci retracement level. So you should pick your Fibonacci from the lower to from the lowest to the top. And most times you either want to use any of the Fibonacci level that you're comfortable with, either at the golden ratio, which is the 61.8, or you want to pick your entry from the mid, which is 0.5. So if you're picking your entry from 0.8, 61.8, which is the golden ratio, and we have the Fibonacci retracement level is actually divided into two. We have the what's the word? Come on, just keep my mind. So we have two ranges, right? We have the discounted region. Yeah. So we have the discounted region, and we have the discounted region is actually before the 0.5, and the premium price. When the market gets to the premium side price, that is when it shifts. There's a shift into this is 1.8 region, right? So if you're using Fibonacci retracement tool, once you get your change of character, you place your Fibonacci retracement to the plotted from the top, and you pick your entry. And once you get your entry plotted, you can see it picked you in here, and you're targeting your say 1.5 RR or 2 RR, and that's it. The market bounced off, and you're able to follow the trend, right? You're able to follow the trend. So you can see this is one of the stuff I'm talking about. You're able to follow the trend, and the market continue uptrend. So another thing that happened, right? So if I'm sticking to my 15-minute time frame to get my entry bias, another thing you get to see is most times the market change character on medium time frame. But what do you want to look out for? I want to look out for a major change of character on 15-minute time frame. That is why for this to happen, you want to go on, you want to check the direction bias on higher time frame as well. What's happening on my higher time frame? Market is actually a swift liquidity, but did not break back into one of the things I noticed, right, is that the market did not break back into the bull mode. If the market did not break out of the bull mode, this on STIC, right, we have the green line. The green line is the bull and bear market line. So if the market closes above it, is an indication of the bull trend. But once market closes below this line, it's an indication of the bear trend. And we also have the blue line, which is like the support and resistance line. Okay, so it's actually helps you to know the market flipping into support and resistance zone. So going back into my entry time frame, which is 15 minutes time frame. So I decide my entry on 15 minutes time frame, and the market continues. Let's play it forward. So, like I said, what you want to do is not just to see a breakout, the market breakout, and just follow it through. What you want to look out for is the bias. What happens? Where are people putting their liquidity? As it sweep liquidity, so one of the faces you want to look out for is as market sweep liquidity. If the market has swept, if the liquidity has been swept, then possibly and their liquidity above, then there's going to be a reversal in trend because the market will want to come and want fill the fair value gaps and also pick liquidity above, which is one of the things that has been done right now. And looking at what is currently happening, the liquidity are getting formed at the top. And one of the things that will happen, right? We have because people already feel like the market is breaking structure to the uptrend. Okay, this liquidity has been swept. The liquidity I plotted earlier has been swept. Before people feel like the market is breaking uptrend, they want to put their stop loss below the low, right? And like I said, that is where institutional traders mostly look out for. So they're looking out for the stop loss for you to put your stop loss above below the low. So for me, where people tends to put your stop loss is where you want to put your entry, and that is how to trade like a smart person. Where people want to put your stop loss is where you want to put your entry because there are liquidity here, there's liquidity here. So what I'm looking for is okay, look for entry plot. Let me increase the plot time like 5. So look for entry plot. The market will most likely come back to sweep the liquidity that was here. You can see there's a liquidity here, there's liquidity here. coming back to sweep the weekly because okay, yeah, this daily, right? One, two, three, four, five. Yeah, this weekly low. We currently have a new weekly low around here. This is the new weekly low. The market will post, like I said, sweep the liquidity and mostly come back and bounce back. And if you're trading on, if you're a scalp trader, like I said, you want to do your scalp trading on just a short time frame and get out of the market. Cap your entry, get out, and move. You can see the market has already broken structure right now and it has already changed character. So most likely, if you're trading, you want to look at where the institutional liquidities resides. So, and one of the things STIC will help you to do is to detect those liquidity while they're happening live as they're happening, detect the liquidity. Now, the liquidity has been swept. You can see liquidity has been swept here. Then what do I want to look for? A change of character. So let me just pause it. So just pause. I'm looking for a change of character here after it has swept liquidity. It swept liquidity here, a change of character. Now, this entry is actually invalid. It mostly will end up hitting our stop loss because it did not break into the bull zone. It changed character, but the market reversed. So that also happened in the market. It's one of the things you want to look out for. Pause, come on. This is basically, I don't know why this is just running and running and running. It doesn't want to stop. So, like I said, the market sweep liquidity, but bounced back, but could not reverse and break back to pick the upward liquidity. When is they want to look at for? The market change character again to the downside. So when the market change character here, you follow through. And basically, if one of the things you'll have noticed, if the STIC entry plot is enabled, is STIC would have plotted the entry for you. Like that's one of the things STIC does. It plots the entry for you, helping you know the market direction. So from here, from STIC analysis saying the market is bearish. I'm waiting for it to load. It's telling me the market is bearish, right? Yeah, telling me the market is bearish. This was the liquidity sweep that I tried to pick but reversed, and the market ended up flipping back bearish. So the market flipped back bearish and it's continuing in that direction. Another thing STIC has already done now is that the market is already flipping back into the bull mode. And this is, for me, I think the market is yet to pick all the liquidities below. So it's possible. Let me go back to our time frame. So I want to look out for liquidity. So one of the things you can see, for me to do analysis right now, I have to be shifting from time frame to time frame and reducing my zooming in, zooming out. So from what I can see on the hour time frame, I can see that we have a number of liquidity around this region. Come on, plot now. We have liquidity around this region. We have liquidity around this region. There is an order block here. There's upward liquidity around this region. So most times the market will most likely come back to sweep all this liquidity. So this is me looking at it from our time frame condition. So there's liquidity here, there's liquidity here, there's liquidity here. So you want to wait for where the liquidity resides, and the market will most likely just come back to sweep it and bounce back upward. So going back to my 15 minutes time frame, and you can see the market has already swept this liquidity here. It already did sweep the liquidity here, and once the liquidity gets swept, most likely this lower, the last one is yet to be swept. Once the liquidity gets swept, I want to look for an entry. You have an entry and you sweep. So most times, the mistake most traders make is when the market breaks structure, they just want to follow the trend and follow the market. But that is the wrong thing to do, right? You want the market to, once the market breaks structure, is an indication that the market is an indication that there's liquidity below. And you can see here, when the market sweeps liquidity below, you want to look for a break of structure and place an entry. You can see there are new liquidity being formed below. Let me just pause here. Break of structure and liquidity gets swept, and the market, you pick your entry and your stop loss, and you wait for 2RR. I don't know, this is not waiting for me to, my pause button is not pausing at the right time, so it just keeps overplaying, which is not cool, but it's fine. So one of the things, like I said, whenever liquidity gets swept, you want to look for a break of a change of character, and that is what just happened here. Let me zoom in. So liquidity gets swept, then the market changed character. This was it. Where's the part? When the liquidity gets swept, the market changed character. This was the, yeah, this was it. Let me change this to green so it can be obvious to see. So this was it. Market change character here. Market change character. This was the first break of structure on my medium time frame. It changed character, and what's up with the network? Come on. Oh, okay. It's not playing. So, like I said, the market breaks. You can see we have a change of character here. When the market changed character, then we had then we had, that's where I said I'm going to be placing my entry. So change character here, I place my entry here. I'm waiting for the market to come back. So the market will always bounce back. The mistake most people make is once the market change character, you just want to follow it through and not knowing that the market will come back to pick liquidity below. So we have different kind of liquidity, right? And look most kind of entry. Like I said, one of the things you want to do is either use Fibonacci or you want to use your fair value gaps. Or most times you want to use what we call we have two regions. This whenever the market change character, we have two regions from these blocks here. So this is me using STIC, using analyzing market without STIC. Okay. So understand this is me analyzing market without using the STIC entry and just using that to place my entry. This is mostly used by um, market structure traders, those that actually understand the market structure and want to know where the liquidity resides. So, like I said, we have this region, this change of character region is breaking into two. We have this is what we call the range. From here to here is a range, is the entry range where you want to look for entry. From here is the from here we have the fractal, we have the range, we have the fractal, and we have the come on, this thing just keep my mind right now. Range, fractal, and there's a zone. This just anyway. Basically, what I'm trying to say is, yeah, we have this broken into three. We have either you want to pick your entry at the range, or you want to pick it at the fractal. That is when the fractal is actually the lowest. This the lowest part of the where the liquidity resides basically. So the lowest candle, the height of the height of the lowest candle before a change of character. So one, that is what we have here. That the height of the lowest candle before the change of character. That's where that's where your other block mostly get from. Yeah, the order block. You want to either place your entry from the order block, from the fractal, or from your range. So most times, the in situations in the market might not, most times might not come back to fill your the order block. Sometimes the order block might not get filled. That is why it is best for you to look for entry around the range. So most times I just look for the range and look for the market to hit the range. So you can see, and that is what I mostly like most times use, because most times you end up missing entry because you're waiting for the market to come back to the fractal, and the market might not come back to the fractal. Like what happened here, you can see the market went up and came back down, but did not get down towards the order block. It didn't come back towards the order block to pick the liquidity at the order block, and the market bounced back up. So it's mostly you want to pick your entry around the range, and if you pick my entry around the range, the market I do my 2RR, which is like 200% of whatever I risk, and I am out of the trade already. So that's basically how to pick your entry, analyze multiple time frame, uh, look for liquidity zone, look for liquidity sweep, look for change of character, and you wait for the market to come back to your entry, that is the liquidity. Wherever the liquidity resides, the market will most likely come back to pick the liquidity zone. Pick the liquidity around the liquidity zone and continue uptrend. which is what mostly happening. It is a pattern, and this is like the major mechanical structure in the market. So if you if you're able to practice and build this structure, right? If you see this pattern happens more all the time, repetitive and repeating itself all the time in the market. So if you're able to understand the structure and build your trading analysis around this major structure, you most times end up being in wins almost all the time. So that's like the major thing, right? Awesome. Yeah, that's like the major thing. So you want to look out, like I said, you want to look for your look out for what is happening on the hour time frame. Then the next thing is to look for your direction bias. So once you understand your direction bias, then you look for this is actually a live chat. I'm supposed you might probably should be typing this out if you are because I'm not writing it on the screen right now. So you look out for the direction, what is happening on the daily time frame. Look out for hour time frame, what is happening on your daily time frame. Then look for your medium time frame, what is happening on your medium time frame. Has the market changed character on the medium time frame? The market has changed character on the medium time frame, then you want to look out for the you want to look out for liquidity form because whenever there is a change of character, there is going to be fractals and liquidity formation below your change of character. So you look out for the market change character, look out for the liquidity on the market, pick your liquidity, then plot your entry, pick your entry, and wait for the market to boom. And once the market booms, you pick your end, you get your TP and you're out. So one of the things that STIC does is we have multiple strategies. Yeah. So we have multiple strategies you can use with STIC. We have strategy 1, strategy 2, and strategy 3. So depending on the asset you're trading, from my experience, right, strategy 3 is more or less an hybrid strategy. It works with both. It works mostly on crypto assets and some trendy assets. For strategy 2, I've seen it to be more effective on forex market and stock market, mostly on forex. If you're trading forex, you probably want to switch to strategy 2. And if you're trading forex and you are you are a market structure trader, you want to be on strategy 2 when you're using STIC. But if you're probably trading anyone, strategy 3 basically works for both forex, crypto, or the assets. It's an hybrid strategy. That's what I've been built into strategy 3. So you can also use that for your entry and your exit. So let's just continue, and I'm going to go back to plotting STIC right now to see what happened, what has actually happened in the market today. Let's go back to what we currently have live, what's currently happening live, or what happened between the last 24 hours, right? So I'm exiting the replay mode and going back to the normal chat mode. And I'm going to plot and play STIC chart. So let's see what happened. So, like I said, I took some time to actually analyze on multiple level because it's very, very important. The time you take to analyze is what is most important than the entry you pick. When you analyze your chart, you want to pick your entry. Okay, you want to pick your entry. This is actually a sweep zone. I plotted this because if you go on 4-hour time frame, you will see the liquidity block on 4-hour time frame here. So basically telling me that there is a change, there is a liquidity, downward liquidity here. You see here, short liquidity. You see short liquidity, sell side, this is sell side liquidity. You can see this red box, that's a sell side liquidity. I just extended it. So whenever there is a sell side liquidity on your higher time frame, that's the indication that the market, if you are having a buy, the market will mostly come back to switch this liquidity before coming back down, which is what actually happened. And if you're trading on our time frame, you are going to be using this for a long-term trade. But if you're trading on medium time frame, I'm just going to be using this as a confirmation for my direction bias. That is to confirm that the market is actually switching gear. So if you look at the market actually came back into this region, and let me play let's enable the entry plot for strategy 3 because by default STIC is on strategy 3. So enabling the entry plot for strategy 3, we should see the sells. Yeah, there's supposed to be, you're going to get the sell plot and also get the direction bias for, yeah, you can see this is it. So my medium time frame, this was it. STIC indicated that the market, this was the entry. The market actually flipped bullish, picked an entry and followed through. And if you're looking at what is happening here, the market changed character and the market is going downward. When the market change character, STIC already plotted what my stop loss, where my stop loss should be, which is above the I before the change of character, and my entry and my TP, which is actually around here. It's actually close to the TP. I think my TP is current. I put it to 2RR, so it's here to hit 2RR. But by default, it is on 1RR. Okay, that is one of my alerts. That's an alert for me. Yeah. So the entry actually hits the market. Once you get a break of structure, you want to look a change of character. You want to look for the market to give you your entry. So basically, I put my entry here. Most times, because I don't want to miss entry. I've mostly put my entry around the change of character. Sometimes you can even use reversal and plot your TP. Control Z. Come on. Yeah. And look for your TP to if you use 1.5 RR, that is 150% of your risk. You're going to be able, you'll have been out in profit. If it's 2RR, then you'll be looking for the market to hit your two. Come on. My chart is currently hanging right now. You're looking for the market to actually come back to hit your TP and get you out in profit. So basically, that is how to use to analyze the chart and pick your entry. Do you analyze on your hour time frame? Look for your direction bias. Once you get a change of character, you place your entry and you wait for the market to hit your entry while your stop loss is way above the your stop loss is way above your the liquidity zone. You put your stop loss above the liquidity zone. And that is what has accurately happened. This is Solana. Solana is like one of my favorite assets I trade, right? And it's Solana, and you can see we had a short and that's ETTP and we're out. So that is it. If you have any question or need more clarity, you can ask in our Telegram community. And to get access to STIC, you can go to our website, which is cryptoanalyst.com/STIC or cryptoanalyst.com. You get to subscribe. And for like I said, for everybody that are interested in getting access to STIC and attended this class, STIC is not for everybody, and trading is not for everybody. But if you want to explore it and you feel like you want to check it out, you can ask, create a free account here. Once you create an account with your trading username, you're going to get free access to use STIC for the next 30 days. Normally it's 7 days, but you can see here in our pricing, it's 7 days, but we are giving I'm going to be giving 30 days free access to everybody within the next from that will be to in next within the next 1 month. Everybody that actually gets subscribed are getting 30-day free access. So you can explore that on your okay, good, thank you. You can explore that on your chart and see how it works. If you find it interesting and you want it, if you want to probably subscribe, you can subscribe. It's not compulsory. You can subscribe to it and use it. But if you don't think it's something you want to use, just explore it and you can go back to your using. And if you want to use STIC and you think if you're using STIC and you don't want the entry plot, like I said, you can go to the you can go to the settings and disable the entry plot. It's going to disable the entry plot for you. And you can also show your showing institutional liquidity region. Once you get that plotted, just plot it on the chart, wait for your entry. The market will always come back to sweep the institutional liquidity. And once they come back to sweep that liquidity, you can go from there and onward. That is it. If you have any question, and if you enjoyed this session, if you learned something, at least one thing, please do like and subscribe and follow us on our social media. We are available. We are active on Twitter, Instagram, Facebook, and on YouTube, and also on Telegram. So join our community on Telegram. Get your questions. We have professional traders there. Even if I'm not online to respond to you, we have other professional traders that will respond to you and give you access for free. That is it for free. So, like I said, that is how to analyze charts. Don't forget to trade smartly. And do we have any question before we leave? Let me know if you have any question. We are currently streaming on Facebook and on YouTube. So if you have any question, please let me know. Let me see if you have a chat. I didn't enable chat here. That's not bad. That's not bad. Okay. I've missed all the chats. I've missed all the messages actually. So, but if you have any question, please do ask them and let us know. And if you're getting to watch this later and you have question, you can either ask the question in the description of this video or go to our Telegram and ask a question there and you're going to get access to it. get response to your questions. Thank you so much for your time, and don't forget to trade smartly. Have a good night. Enjoy the rest of your day. Yep.